Hello, friends. Today I wanted to introduce Mr. Ajit Devadasan in our interview series video. Mr. Ajit Devadasan is the product head at ITS Capital Portfolio Management. They are a boutique PMS and AF service provider, and Mr. ITS Capital is a boutique service provider which is being there for the past 9 years, having branches across South India, and it comes with a very specialized team. Here, Mr. Ajit Devadasan works as a product head. He has more than 2 decades of work experience in portfolio management, in channel management, client servicing, client communication, and other things. Previously, he was associated with the HDFC Bank as well as with UTAMC in the similar lines. Welcome, Mr. Ajit Devadasan.
Thank you, Mr. Venkat. Pleasure speaking with you. Yes.
Yes.
Hello.
Today, since many of my investors might not be knowing about ITS Capital, could you just explain about the investment philosophy of ITS Capital and what is the unique thing which you bring it to the table?
Sure, sir. So now I would like to start by giving a small background about ITS Capital, and then I'll run into the philosophy and I will explain the philosophy. So ITS Capital was started by Naveen Chandramohan in 2017. Naveen, by background, is our founder and fund manager. He's from the IIM batch of 2004-5. From 2010 onwards, he's been in the fund management industry, with managing a hedge fund out of Hong Kong, which is invested in India. Now, between 12, 13, and 14, he was adjudged best fund manager in Asia by Asia Hedge 3 years in a row.
Hmm.
He's from Chennai. So in 2016, he came back to India and he set up ITS Capital. And we've been in existence for the last 9 plus years. So this is our background. Uh, Naveen's entire net worth is in the fund. So that's how the fund was started to manage Naveen's net worth, a US family office, and the partners of that ITIS. Now, coming to our philosophy. So, what ITIS is designed to deliver is consistent risk adjusted return across market cycles. Now, consistency in ITIS comes from risk management. We don't want to chase returns. So, what it means is the portfolio is set in a way where when the market falls, we'd want to protect downside, and in a rising market, we'd want to capture the upside. The portfolio would capture the upside. We are strong believers that the market moves in cycles. For example, I'll take a stark example. Say between 2001 to 2007, the energy sector, that 7 years, had an excellent run where nearly 42% IRR or CAGR is what the index gave. If any passive fund or any fund which had these businesses in their portfolio would have given 42% IRR. But the next 7 years, the CAGR of that index is a negative of nearly 4%. So one cannot continuously invest in a business because a business goes through cycles and you would have to time those businesses, and in the economic scenario, how does that business fares and how it evolves, and we will need to capture that so that you capture the entire return and see for the next opportunity which arises and build in a position in that sector. So that is how we've looked at portfolio construction. When we look at construction, we look at the market from a top-down approach. See which sectors has tailwinds, and then within those sectors, we want to do a bottom-up approach. Within those businesses, see which businesses have ability to grow, have a high growth and value, and have a tailwind, and invest into those businesses. Now, these businesses don't have to be large, mid, or small. We are market cap agnostic. So, these businesses can, a small cap company can also be excellent company with good governance and cash flows coming in. So our combination would be between large, mid, and small within that sector. So this is what ITIS brings to the table.
So you will be always benchmark agnostic. That is what is the
Yes.
USPs which you will be having. So
Yes.
coming to the products, I see that you have your fundamental value fund PMS as well as your all-weather multi-cap AIF basically.
Yes.
Could you please tell me what is the standout feature in both this offering
Okay.
to the
So,
investors at large?
so before I start, both the fundamental value fund PMS and the all weather equity opportunities fund both follow same strategy. There is no strategy, just the structure is different, but the strategy beneath is the same. Now, the one unique feature which we would showcase is risk management. Having said that, what are we trying to solve here? In the market, we know that returns does not come in a linear fashion. That is, let's say if I invest today uh, and my portfolio has to give you 20%, the 20% does not come over, is not spread equally over the 3 years. There will be 1, 2 years of smaller performance and 1 year where returns are concentrated, which would basically would compensate for the remaining years. So returns are return. How the market is placed is whenever return comes in, it comes in spurts, in concentration. So my what I want to do is to look, as I already told you, we look at sectors which have tailwinds and businesses which are good within those sectors, and place the fund there, position the fund there with the right market size and with the right portion size, so that they can take advantage of the growth when the market awards the growth. Second is we want to smoothen the client's journey. That's over a period with less volatility. So what we want to do is we want to protect the downside. You, why? Because is when a client invests, we over the last 20 years, when the market goes down, every client would see that the behavior is, or the way they react to it is, let's say it's gone down, what is going to happen to my capital? Is the market going to rebound? When is it going to rebound? Now, when the market goes down, my portfolio protects the downside. Then the client has confidence. They know that the portfolio as a whole is protecting my capital. And these businesses are strong enough to hold off the drawdown. And the third thing is my portfolio able to do the same process over and over again in a repeatable fashion? Because to choose a winner once, anybody can do it. But to choose the portfolio over and over again, and that portfolio giving you returns every year at a alpha to the market is what we want to do. So what we aim to do is look at 17 to 18% IRR, high teens return over a long period of time. So that is what we want to do.
So in the downside market, what are all the changes you will do apart from holding cash? What are all the other incremental changes you will do so that you can provide a better risk-adjusted return for the investors?
Okay, so the businesses we choose are businesses which have a high margin of safety. So normally we've seen our businesses fall less than the market. Even last month, if 1 month is not a good example though, but even in last month, the portfolio outperformed by 1.4% over the index. And this month, till now, we've outperformed, the market is up, so we've outperformed by nearly 1%. So the businesses would not, because they are good businesses, they would not fall as much as the market. That's how the portfolio is constructed.
Okay. And one interesting thing what I noticed is that your AF is also recognized as the by the IRS as a foreign entity with a valid EIN, which helps
Yes,
NRI investors, especially residing in USA and Canada, to invest in
yes,
India. Could you explain the
yes,
tax benefits and the compliance part so that my
yes.
NRI investors will make a note of it?
Understood, sir. So when you look, so our PMS and AIF can take money from US clients. Now, on the PMS side, a client should have been in India for him to invest into the PMS. On the AIF side, what we've done is we've registered the fund. So we opened a separate company. We registered as a partnership company with the IRS. So, so to that extent, we will have a EIN number. Now, in the end of the year, we would give out a K1 and a K3 statement. What a K1 statement will have, so K1 is split into three parts. The first part gives the information of the partner, that is partnership, that is us. Second would be of the partner, which is the client. And third is basically the return breakup. For example, how much money is coming from gains, that is long-term capital gains, how much has come from dividend, how much has come from short-term capital gains. And that can be given to the CPA in the US. And the tax benefit is, tax is only calculated on the realized gain. It is not calculated on the unrealized part. So that is how the K1 would work. Maybe post the call, I have a sample of the K1 which I will mail it to you.
Yeah, that's fine. And so, US investors
Yes.
who, because of that regulations and other where they are even taxed even during accrual, they don't have to worry about it, and they can very much invest here because this fund is compliance with the US
Yes.
AZZ compliance,
Yes.
right?
Yes. So,
Yeah,
since we are a partnership, PFIC, say if you look at a mutual funds, like, it will fall under a PFIC guideline. Now, what will happen if when a client invests in a MF in India? Uh, their unrealized gains also would be taxed. For example, if a client invests a
yeah,
crore,
correct.
becomes 1 crore 20 lakhs as end of the calendar year, that is 31st December. For that 20 lakhs, irrespective, it is even though they have not redeemed the capital, they need to pay tax in the US because the fund falls under the PFIC implication. So here, at the end of the year, we would give you a K1 and a K3 statement. The fund would pay tax for on behalf of the client for the realized part in India, and the K1 and K3 is for the client to submit it to their CPA and do their filings in the US.
Okay. And since the AF category 3 AF of yours comes with a closed-ended structure, so what is the
Uh,
time
okay.
frame you're looking at, and
So our
when is
AIF
the
is an
final
open.
close happening?
Okay, sir, our
It's an
AIF is an
open-ended structure.
open-ended structure. It's just like any of the funds which you have. It's an open-ended structure. It is a fortnightly open structure which opens every fortnight. You can either enter on two times a month. Uh, the fund does not carry an exit load, just like our PMS, because we are strong believers that when the client wants to exit, it can be only of two reasons. One, the client has an urgent need of money. Second, they don't like the way the fund is managed. So in both these points of time, if you are penalizing the client as an exit load, it is not right. So none of our funds have an exit load. So that's how the fund is structured.
Yeah. And the investor also has the benefit of choosing the fixed or the variable structure, because
Yes.
your hurdle rate is 15%, which is very, very good.
Yes. So on the PMS side, the fee structure, we have two fee structures. One is a fixed fee structure of 2%, and we have a hybrid structure, which is 1% management fee and a performance fee of 15 over 15. So the hurdle rate is a 15% hurdle rate. On the AIF side, it is slightly different. On the AIF side, we have a hybrid structure at 1.5% as the management fee and 10 over 10 on the performance side.
Okay.
Yes.
Sure. And as you know, most of these investors are all high net worth investors, and SEBI has come with a accredited investor framework also.
Yes.
So, do you
Correct.
also onboard investors with accredited investor? Do you also run a special class for them, or with a, and it also comes with a lower ticket size?
Yes. So for accredited investors, we accept accredited investors. For the PMS, the ticket size would be 25 lakhs for accredited investors to come in, but we've not seen accredited investors coming at that. That's the base minimum where they can come in, but the clients in the accredited investors have come above 5 crores and above only they have invested with us. In the AIF, since we started it 4 months back, we've not had accredited investors coming in till now. There, the minimum ticket size what we have is 1 crore, even for accredited investors while they come.
Control? Yeah. So that will be collected in how many drawdowns, or how it is being done?
So, we don't have a drawdown concept. Every time the client comes in, the minimum they have to give in a crore, and they can top up whenever they want. So let's say if a client is
Okay.
coming
So
wants
that is
to,
how you, because it's open in the structure, you have
they
that
can top up.
thing.
Yes, they can top up whenever they want.
Yeah. Yeah. And also, I have noticed some of the unique customer touch points, something like the ITS commentary and
Yes,
the ITS snippets and
yes,
the stock rational, which you keep sharing. Do you
yes,
also provide any frequent webinars where the investors can also participate in it and listen
yes.
from the fund manager on a regular basis?
Yes. So every quarter, have a webinar which Naveen, the fund manager, would address. What the webinar would be is where Naveen would address what happened in the last quarter, how is the portfolio positioned now, and how does he see the portfolio evolving over the next quarter. So there, every quarter, we would have a call. The call for the last quarter got happened on 18th. That's last Saturday. Now, all our calls are updated on our web page. From since inception, all our calls are updated on the web page. And over and above here, clients can ask us questions. We'll be answering client questions
Hmm.
in the call. Over and above this, what we do is every month we give stock commentaries. We share the client fact sheets on day one, and we also write monthly letters, which Naveen would write on how he sees the portfolio, how he sees the market. That is there. And on Saturdays, we have a special data sharing, which is done every Saturday, called Saturday, where we give out interesting stats about the market or about a specific industry. Everything is captured in our webpage, and it's updated there. If clients want to see previous Saturdays, what was the data shared, they can always go and see.
Nice, very nice. Sure. Any final comments you would like to share to my resident investors as well as
Yes.
corporate investors as well as NRI investors
Yes.
residing especially in US and others.
Uh, so, what I would want to say is we would like to partner with all your clients, especially with veterans like you in the industry. It puts us also in good light with all your clients. So, any client of yours who want to speak with us, we'll be more than happy to either meet them in person, or if it's an NRI client, do a digital meeting, and then I'm sure that they will like us and the way we manage capital, and we would definitely like to work with them for a long term.
Sure. Yeah, thank you very much. And coming to our show and sharing a lot of insights about ITES capitals and the investment process as well as the tax
Sure.
benefits which they will get, especially for the US investors. We will definitely be in touch with you. Thank you once again.
Pleasure having you, talking to you. Sir. Thank you so much.